Hi, welcome to the Market Week in Review for the week ending 17th of October 2025. My name is Alex Koosley. I'm a senior portfolio manager here based out of Sydney. And this week was quite interesting. So if you've cast our eyes back to Friday last week, the market had a pretty big down day on the back of heightened trade tensions between China and the United States. That kicked off with China announcing licenses and export restrictions on rare earths, and then Trump responding with a 100% tariff threat. Through this week, we've seen a willingness to talk. So both sides have kind of ratcheted down the tensions a little bit. We're heading into the APEC summit where President Trump and President Xi are likely to meet, and that will be the sort of center point for the negotiations. And we think that as we head through that, volatility will remain a little bit elevated, but the cooler head should prevail because neither side really wants to go down a path of 100% tariffs. More broadly on the macro front, so we're still in the US government shutdown, so there is no official data coming through, but we do have a couple of things that we did get to see. So the first was the NFIB survey, which is a survey of small businesses. That was a little bit softer than expected. We had the Philly Fed and the New York Fed surveys, so their PMI versions, where they were mixed. Philly Fed was a bit softer, New York Fed was a bit stronger. And then finally on Thursday, we got the initial jobless claims by state. And what you can do is you can add them up to get the official, or, to get the nationwide. And based on that, it looks like jobless claims fell through the week. So a bit of a mixed bag, but that jobless claims is a really important indicator for the strength of the labor market. And that is an encouraging sign on the week. On monetary policy and interest rates, we saw the US 10-year fall through the week. We're recording this as of Thursday close. Both Jerome Powell, so the Fed chair, and Governor Waller gave speeches this week, really pointing to an October rate cut being still on the cards and quite likely. And I think, interestingly, Waller made also comments that beyond October, it's quite a bit uncertain. There's a bit of uncertainty around what the future path of rates would be. So still quite data dependent, but really pointing towards that October rate cut, given that the labor market is still showing some signs of cooling and slowing. The final bit to touch on, there's two more bits actually. The first is on earnings season. So earnings season kicked off this week in the United States. We had the big banks reporting for the large cap space, and I think generally the thematic that came through there was strength. We've seen pretty strong earnings numbers, and also we saw signs that the consumer is still in a decent spot. So charge-offs and delinquencies for consumers were both better than expected, and so that is an encouraging sign. Outside of the United States, in large cap space, we had ASML and TSMC, so Taiwan Semiconductors, both report better than expected. And that's really a continuation of that AI thematic. And, they're very integral to the AI trade. So that dynamic has continued. And then on Thursday, we got a couple of regional banks in the small cap space in the United States that were a bit softer than expected. And that led to small cap underperforming on Thursday and seeing a pretty material decline. And so there is clearly some pockets of stress in regional banks in the earnings. But on the large cap space, it is still a sign of resilience. Finally, a bit closer to my home in China. So we got a few pieces of data. We got the trade data and the credit impulse data. On the trade data, we saw exports and imports a bit stronger than expected. That moves around quite a bit month to month. I think the more important thing and something that we focus on a lot at Russell Investments on looking at China is the credit impulse. And there we've seen that loan demand is still quite soft and actually was softer than expected through the month. And so what we haven't seen still is a resurgence in consumer confidence and resurgence in business confidence. And so as long as those confidence numbers aren't improving, it's likely that we're going to remain in this world where credit impulse in China remains quite soft. Okay, with that, that's all I have for this week. But thank you for listening, and we look forward to speaking to you soon.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.